Hey guys, Dave with Moniology on markets. This is the weekend market review for March 2nd and 3rd, 2019, where we take a look at the markets through a longer term perspective using weekly charts to give us a better and broader perspective of what's going on in the markets and try to remove some of the short-term noise that hourly and daily charts bring us. So without further ado, let's take a look. So first of all, I wanted to go through some of the updated numbers here on the year, and just see what's taking place overall. So you see that the mid caps here, the mid cap 400, they're really one of the best performing. Industrials are up about 18% this year. Nasdaq 100 up about 13, technology 15, and you got the financials here at 56 basis points, barely up. So you can look at that one of two ways. You can look at that as financials are showing that the market's actually weak, or you might find opportunity there. So keep an eye on financials to get a further direction of opportunity or further weakness. Taking a look at some of the currencies here, look at the massive move here that we saw so far this year in Australia, the BRIC countries, Greece, Italy, emerging markets versus the last year. So clearly a bounce back so far this year. It's going to be interesting to watch how they perform in the duration of the next couple of weeks, months, and throughout the remainder of the year. On to commodities here. Obviously, palladium's been the standout. Look at this, 1 year 56%, 22% so far this year. Oil is up 18%. Another one, nickel's up 22%. You've got copper up 12%, and timber and water's up 20%. Guys, drink up now because it might get expensive. But overall commodities, there are a lot of weak ones, and since they're very cyclical, look at the ones that are performing poorly and see if there's opportunity there. Look at the ones that are performing well, see if you can find divergence and either get out of your longs or consider shorting if that's your strategy. Finally, a little bit of the fixed income. You see the high yield at almost 6% move. That's pretty impressive. Emerging markets, similar to high yield, 4.35. So, and the rest have been basically flat. So that's your broader picture of what's taking place in the markets. Now looking at the charts, 10-year U.S. Treasury yield weekly chart. You see this, it broke out of this pennant pattern, and it looks like it's going to move higher, at least in the short run. It wants to test that 50 RSI level, and then we'll see what happens. But I could see a move towards 2.9. But bottom line is, this is in the short run a risk on play, and it's suggesting that the economy is strengthening rather than weakening, and it might cause for added strength in the markets. But we'll see. Here's the 10-year to the 2-year Treasury spread. This is what's called the yield curve, and the 10-year is starting to rally against the 2-year, which is again a sign of strength, not weakness. And if this breaks above this 50 week moving average at 115, and we're pretty close to it right now at 111, then it could signal a trend change in rates. But in the meantime, just a balance for the time being. Dow Jones, Wilshire 2500 here. So this is honestly, I'm kind of lost here. I'm watching what's happening from the sidelines. I see potential potential head and shoulders here. You see this bearish wedge here building up, similar to what we saw here at a similar price point at 7100. And it could break down, and we can see a pretty nasty fall. However, you see this momentum is, on the one hand, there's negative divergence between this move here and this move here. Its momentum is nowhere near as strong. But if you look at the trend line, we've broken the downtrend of momentum. So I'm bewildered, to be honest. I'm not sure which way we go here, because there are a number of positive signs, as you'll see pointed out in the video. I'm going to be watching very closely. Gold has saw nasty pullback here, but a lot of folks are rushing for the exits, but I just don't see it. We had this bearish wedge here, and that broke down, and when bearish wedges break down, it's inevitable, and the question is, where do they find support? Do they break down and start going to new lows, as some naive folks have been suggesting, or is it going to consolidate, or is it going to bounce right back? Nobody ultimately knows, but what you can use charts for is to see probabilities. And what I'm looking at is that the 50-week moving average has just crossed the 200-week moving average. That's a golden cross, if you will, no pun intended. That's very bullish. There's going to be a lot of support around that 1270 area if we do retest it. I wouldn't be surprised if that 1290 area becomes the low, but if it goes to 1270, that's okay. You need to shake out these speculative longs, because they are just riding this wave, but they have no incentive to stay in the first moment of turbulence, and that's why the shakeouts are very positive in the long run. High yield, so this one's very, very bewildering to me, because you see this wedge, you see this negative divergence where we're hitting new highs, but momentum is not making new highs yet. And yet, it looks to be either at the very tail edge of this bearish wedge and we break lower, but on the other hand, it looks like it might be breaking out. And if so, if yields are actually breaking out here, that's a very positive development for the markets, and something that would lead credence to the argument that we're moving higher in equities. Now here's the housing index, and this one again, bearish wedge amidst a downward trending trend line. We broke down last week. We had a pretty negative week, and so let's see what happens if the 50 level holds. That's a very bullish development. If it breaks down, that's your sign that the markets are indeed likely headed lower. So this is a major indicator from my perspective, and one to keep a very close eye on. Crude oil here, also bearish wedge in a downtrend is something that's and below a downward trending death cross, if you will, 50-week below the 200-week moving average, below the middle Bollinger Band, I believe, middle Bollinger Band 5486. We're right above it, to be fair. So if this breaks lower, that's not a good sign. I think ultimately oil retests this bottom here. For the bulls, long-term bulls, you want to see it retest and with positive divergence, possibly hit a low of 40, but with better divergence than better momentum than we saw here. That would indicate this downward trend is over. On the other hand, it could go lower, and it could go all the way lower to 2605 area. So I'm not suggesting it will. The higher probability is it retest this 40 to 42 range, but we'll see. Nasdaq again. You've got this wedge here. You've got this downward trending divergence. We either break out here. There's not much more squeezing we can have. You either break out here, retest highs, or you break lower to retest lows. It's fascinating. Nasdaq equal weighted. This again, this hasn't recaptured this downtrend break, and now it's testing it from the upside. Does it break out here? Does it break out here above that 61 level? We'll see very, very soon. It's kind of like waiting for Game of Thrones. You're so excited, and it's going to happen very soon, guys. So hang on. All right, here's the wedge here in the Russell 2000. Same story. Either break down or break out. Very, very, very important inflection point in the markets. A couple more here. S&P 500 equal weighted. Same story. The equal weighted, as you'll notice, have not been able to break above their breakdowns, and so they're retesting it from the downside. So that's kind of another double whammy. I know a lot of folks have been posting the advanced decline lines have been very, very strong in this uptrend, which is great, and that's very positive. But if they can't retake and start a new uptrend, this is just a bounce in a new bear market. I don't know one way or the other. That's the point of these charts. It's not to predict the future, but to give us probabilities of what the future might hold based on where we are today. Here's the S&P, same story. Potential head and shoulders here, bearish wedge. We could hit 2,900. I just think the probability is to the downside, but I am seeing a number of bullish developments, and I have to keep an eye on that. You've got the semiconductors, which is a good barometer for the overall economy. You see this, it's kind of breaking down out of this wedge here. But it's been very strong. I mean, there's nothing one can say here. We might have a short, shallow pullback and break out higher. So there's a breakdown here does not necessarily guarantee we're headed back to those lows of December, but it certainly suggests that this particular run is really fatigued. A couple more here. Total stock market here. So here's that kind of chart of the potential inverse head and shoulders, the downward trend line. Everything is so similar right now in the markets. It's very unique. This goes to show you algorithmic trading is really taking control of the markets now. It's so their patterns are so familiar, but nonetheless, it's almost impossible to figure out. Here's the transportation index. You notice this? This is supposed to be the strongest index, but it hasn't retested this downward trend line like the other ones have, and it had a pretty nasty shooting star right here, and now we're turning lower potentially. So this one is probably, of all the charts in the sector, this one's the most important watch right now for me. If this breaks lower, I think we head to at least maybe 9,300 here to break to shake out some longs that have stop losses below the 200-week moving average, possibly lower. U.S. dollar, the U.S. dollar, huh? Well, I mean, it's still consolidating here, and until it breaks below the 50-week moving average, you have to assume it's going to break out eventually. However, it's creating all these negative divergences, and my hunch is that we head lower. But until it breaks lower below these two moving averages, you're still consolidating in a bullish formation. So, and look at the PPO here. It is curling higher, so something very interesting to watch. Finally, volatility. Here's a bullish wedge here. I mean, again, volatility in charting, it's pretty nasty, but it gives you a pretty good sense that we're wedging here. We're consolidating, coiling, if you will, and we're going to break one way or the other. So my hunch is we're breaking up, and the markets will pull back, but we'll see. Wilshire 5000, same story, inverse head and shoulders, and we either break higher or lower here. World Index ex-US, we've broken out on the RSI, so that's very, very positive, but price is still in a downtrend, so I'm watching very closely whether we roll over here or we break out, and this would be a very, very good buy point with a very good risk-reward entry here if we break out in the coming weeks. Anyway, guys, this is it for the weekend market review. Stay tuned for our precious metals review. Probably will be posted today. A lot of carnage in that space, so stay tuned for my takes on that end. And equally as important, if you like the work that I do, please subscribe to send me a note at dave@moniology.com. And let me know if you want to be part of the premium subscription service that hopefully will be launching in July. We've got probably about another 50-60 spots open. So if you're interested, please reserve your spot, no obligations. And Dave@moniology.com. Thanks for your support, guys. Have a great day.